Good morning or good afternoon, everybody, and welcome to another Fintech Nexus webinar. We have a great session planned here. We're going to be talking about how to build winning strategies with Fintech consumer insights, brought to you by the good folks at Momentive. And really excited about this session. So why don't we just get started with some quick introductions. My name is Peter Renton. I'm chairman and co-founder of Fintech Nexus. Natalie, why don't you give a quick intro?
Hey everybody, thanks for having us today. My name's Natalie and I'm a product marketer here at Momentive, where I head up our go-to-market strategy for key verticals. So really focused on financial services.
And Dave?
Yeah, I'll jump in here. And my name is Dave Palisso, oversee our financial services sales efforts here at Momentive, as it relates particularly to our market research solution. And my background has always been in the alternative data and market research industry, really engaging with and partnering with some of the largest logos within the financial services space. And more specifically for our audience here today, in my current role, I work closely with a lot of fintech companies that are leveraging our solution to keep a pulse on their brand and their market and their products. And came on board here, what was formerly SurveyMonkey just over 4 years ago, and certainly excited to be here today and talking with you all today.
Okay, so the way this is going to work, we've got some slides of some research that has been done by Momentive. I'm going to chime in from time to time, but we're going to have Natalie is going to lead us off here. And if you have a question, just hit the Q&A button. We will get to those towards the end. And take it away, Natalie.
Awesome. So before we dive into the research, I wanted to give you a little bit of background into who we are. As Dave mentioned, Momentive is the maker of SurveyMonkey, which has been around for decades. We're a survey platform that allows everyone from students to executives to quickly and easily get survey-based feedback. We recently rebranded our company to Momentive to create a fresh page to tell our story as we've evolved way beyond surveys, and we now offer a number of purpose-built solutions for market research use cases, so everything from brand tracking to concept testing. I also want to call out our flexible engagement model, which is pretty unique. We blend our technology with an expert services team of market research consultants, and the customers that we work with can dial up or down the degree of support depending on their needs. We get to work with some of the leading financial institutions as well. Dave and his team are working with fintechs of all sizes, from high growth to currently about 95% of the Fortune 500. So for today's discussion, first, Dave is going to share key takeaways from our research on banking, specifically diving into digital-first banks. We conducted an international study back in 2022, and then in 2023, about a month ago, we reran that same study focusing on the US market to take a look at how things have changed in the last year. I'll then dive into a couple of practical ways to use market and customer insights to inform your strategy and execution, which we know is especially important in today's environment and in fintech, where things are changing so rapidly. And then we'll also make sure that we leave some time at the end for any questions that you all have. And with that, I will hand it over to Dave to share some of the research findings.
Thanks, Natalie. And yeah, just a good way to kick things off, to kind of highlight our capabilities. Want to hit on that study that Natalie alluded to on neobanks or digital first banks, where we look at key metrics around consumer awareness, usage intent, adoption, customer experience. And we do so, as Natalie alluded to, on the global scale, looking at 5 countries in particular. And you can see we focus specifically on 5 major markets. We collected roughly 1,000 responses in each country. Fielding time, as you can see, was quite quick. We wrapped up each country in less than a day. So just, you see some of the key takeaways there. We'll hit on pretty much all of those. As Natalie mentioned, we did a refresh of the data at the beginning of March. But we do want to kind of revisit the 2022 data because it really serves as a baseline and really a baseline for our conversation with the 2023 data. So now, if you flip over to the next slide, this is the 2022 data here, but obviously digital banks are still gaining traction in many parts of the world, and adoption really varies widely from country to country. So the first thing we really wanted to look at is around awareness. So from this slide, it's very clear that people are generally aware and familiar with what digital banks are in these countries. But the big call out here is really the Latin American countries. You can see that they're way ahead of the curve as it relates to these key metrics around awareness and familiarity. And this is a common theme that we'll keep coming back to, and you'll see continue to come up in the slides going forward. LATAM countries are just well ahead of the curve, which really probably doesn't come as a major surprise to a lot of people on the call here today, just given the regulatory environment, the large unbanked population in these countries, and just the general dynamics going on in those markets.
So Dave, is there a reason you chose those 5 particular markets for this survey? What was the thinking behind that?
Yeah, so first and foremost, we wanted to make it an international study, just given the varying dynamics that are going on in each one of those markets. We wanted to include some Latin American countries specifically, just because of the heightened adoption that we see down in those markets, particularly in Brazil. Obviously, a lot of our customer base is here in the U.S., so certainly wanted to hit on some of those digital banks, and then just wanted to get some feel for what's happening in the European market.
Okay.
But yeah, good point. And in the sense that we really could have chosen any market out of the 130 markets where we currently have consumers and respondents that we're able to gather feedback from.
Right. Well, those 5 are pretty hot markets, and particularly when it comes to digital banks, all quite well established, as we can see in this slide.
Yeah, absolutely. So I think it does give us a pretty good representation of where things stand today in the digital banking world. So, so just kind of moving along here, I think one of the questions that we really wanted to better understand is really what place each types of these banks have in the total landscape of the banking market. Are these complements to one another, or are digital banks or neobanks a substitute and will ultimately displace what traditional banks are doing today? And here on this slide, we're looking at the percentage of the population that have A, just a digital bank, B, just a traditional bank, or C, they have both. And it's pretty clear, you see in most of these countries, except for Brazil, most consumers still are solely using traditional banks, which are those blue boxes on the screen there. You can see the majority, over 50% in each one of those markets, are using traditional banks. But you can see also that a good portion of the population, particularly in Brazil, where digital banking adoption is more widespread, where consumers still are using a traditional bank even when they have a digital bank. And that's the green boxes you see there on the screen. So really just an interesting data point to track. How long will these types of banks be used in tandem? Will they continue to be used as a complement, or at one point will these digital banks be a substitute? So we'll revisit this slide in a few minutes here when we look at specifically 2023 data and how that has trended over the last 12 months. But just wanted to show this as a baseline for that conversation a little bit later. Income levels on this next slide are really interesting to look at. And just for some context, Natalie kind of alluded to some of our panel there, but for context, we have the ability to target consumers based on upwards of 150 to 200 different attributes. So things like age, gender, household income, those are some of the more obvious ones. But over time, getting down into more specifics like job function, household makeup, how many kids do you have, what kind of car do you drive, finance related items, do you own or rent your home, type of insurance coverage that you have. So point is very detailed, very specific, and really highly actionable for anyone trying to get up to speed on a particular market. So obviously here we're looking at those same breakouts we were looking at on the previous screen, but here looking at income levels. And I think the one key takeaway here is that lower income consumers have a higher adoption rate of just digital banks. And that's particularly true when you look at the Brazilian and US market, and probably not something that's overly surprising to the audience here today. So, just if you kind of take that in the context, on going back to that question on traditional banks versus digital banks, are they real competitors? Very likely that they're targeting different consumers based on their product offering. This slide, just another breakout from a demographic standpoint, looking at age specifically. Very clearly, the younger generation is driving the adoption of digital banks. Again, no major surprises there, but something that would be interesting to track over time and see that adoption rate of some of those older generations. So those are just, I'll pause there. Again, wanted to call out the main takeaways from the study we conducted last year, but more importantly, we now want to kind of shift gears and look at the data that we just collected a few weeks back at the beginning of March to really see how that data trended. But maybe before I get there, Peter or anyone from the audience, if they have any questions, I'm happy to.
Well, I'm just curious, on this slide, is there a reason there's no 65 and up for the Latin American countries? Was there just not enough sample size, or what was the story there?
Yeah, we just focused just generally thinking the limited feasibility in those markets, and we just wanted to make sure we had a statistically significant sample. So we have a little bit less feasibility in some of those countries, and just decided not to include those for those particular markets.
Yeah, makes sense.
Yeah. Okay, so just hopping into the 2023 data, and I think the main thing to call out, obviously we did a refresh of the data, specifically looking at the US market. Now, just looking at the US market, not looking at any of those other four countries. And obviously, as you start generating time series data and you do that longitudinal type analysis, that's where the data gets incrementally more valuable on our platform. Be able to spot key trends, major inflections in the data, so you can act fast and really shift focus on go-to-market strategy, product development, whatever the major business decision you're making. So that's what we'll kind of get into a little bit here. And I think the big call out here is when we ran this study, March 8th, and you probably already figured out that was just a few days before the SVB data, SVB news hit the market. So just take that in context of where what's kind of transpired over the last few weeks. Certainly a good study to revisit now that the banking industry is a little bit in turmoil. But I think better in the sense that it gives us a better baseline understanding of how things have trended over the last 12 months before all this news hit the market.
If you'd done it like 3 days later, it would have been a distorted study. I think it might have been.
Yeah, absolutely. So yeah, we got it just under the wire, but certainly something that we plan on revisiting, and our customers are revisiting to see how some of these key data points have really been affected related to consumer behavior in the banking industry, and something that we'll probably have a refresh of data by the end of April.
Mm-hmm.
So looking at some of the key findings, now if you switch over to the next slide, here's that same slide that we looked at before, but now looking at the 2022 versus 2023 data. No major moves necessarily, probably what you would expect, to be honest. And as you can see, since last February, we saw a slight uptick, +3% of consumers using digital-only banks. Subsequently saw a 2% drop of consumers using just traditional banks. And if you're having a little trouble deciphering some of the percentages there, digital-only banking, those boxes in yellow, that's about 20% of the population that we surveyed. Those green boxes, those that have both a digital and traditional bank, that's 27%, and then traditional banks only 53%. So very clearly, still the majority of the population that are using traditional banks, but definitely gaining traction just in the last 12 months. And again, our customers recognize the importance of tracking this type of data, or whatever industry they're tracking that's important to their business, tracking that on a time series basis, whether that's quarterly, monthly, whatever makes sense based on how quickly your market is changing. And certainly in times of turmoil, many of our customers increase their frequency of the studies to get a sense of changing customer sentiment. Obviously, we talked about what's happening in the banking world and the importance of really seeing what's just happened over the last 3 or 4 weeks, and definitely a few years back when we were right in the midst of COVID, we saw a huge influx of interest from customers and new customers that needed to keep a pulse on their consumers and really understand how that's going to affect their business going forward. So that's where we see the heightened level of frequency with customers running time series or recurring surveys on our platform. And here's the same slide we looked at before regarding awareness and familiarity. As you can see, overall net familiarity has increased substantially to the tune of 11%, 11 percentage points, going from 69% to 80%. One surprising thing you see it called out there on the right hand side is the highest jump is among respondents with household income over 100,000. We saw a spike. That spike basically went from 77% in 2022 to 92% in 2023. And just an interesting thing to keep tabs on. A lot of digital banking value prop is around low fees and accessibility, but in terms of overall familiarity, it's growing fastest and generally highest among well-off consumers, and just something that we thought was particularly interesting in that wave over wave study.
Yeah, that really is interesting. And it like to go up, that's a statistically significant spike, right? It's not just going to be noise in the data. There is, seems like, so the wealthier Americans are now much more aware of, 92% obviously a very large percentage of the population have awareness of digital banks. Now, I'm wondering, like you say, that like what was the lowest population, the lowest income people? It's at 72. What was that last time? Do you know?
I'm not sure what that was off the top of my head. I don't know.
Sorry.
If you have that. No,
didn't mean to put you on the spot, Dave.
And we could pull that very easily. Just to give us a moment on that. We can
right. Well, that's obviously, as you know, that's what most of the digital banks are targeting. They're trying to get more of the lower income people to come on board because, as you say, they focus on low fees or no fees, focusing on being able to get your pay a couple of days early and getting those kind of like overdraft protection or a way to kind of have a short-term loan to protect yourself from overdraft. I think those things seem to be more appealing to the lower income people.
Yeah,
and
certainly.
Just chiming in here. So in 2022, for that lower income bracket, it was at 66%.
Right. So
66%
up, but
to
not
72%.
as much. Right.
Yep, exactly.
Interesting.
Yeah. So definitely, we're seeing trending in the right direction, or trending up as we would probably expect for really all the key metrics that a lot of these brands themselves would be really focused on, whether that's awareness, familiarity. In the next slide here, we're going to get into future intent, and it's actually a pretty good segue into this. Survey data inherently is fantastic to gauge future intention, forward-looking insights into what consumers may or may not do in the future. And again, just kind of come back to, in times of turmoil, historical behavior isn't necessarily too reliable. How will the recent events in the current environment really affect your behavior going forward? And I mentioned COVID. we saw that huge influx of customers really wanted to keep a pulse on their consumers, because really what had transpired to that point, our world was turned upside down. So that's really where understanding, as government shutdowns and lockdowns are lifted, our consumers going to feel comfortable getting back on airplanes and going back to hotels and going back to the grocery store, going back to movie theaters. Really, that was the type of questioning that a lot of our customers were asking across the board, obviously outside of financial services, but really understanding that future intent. And so looking at this slide, really interesting data as you look at likelihood to open a checking or savings account with a digital bank. Obviously, we talked about awareness is going up. That's one element. But looking at the huge spike in those consumers that are very likely to open a digital bank is significantly higher, going from 26%, going from 11% in 2022 to 26% in 2023. Definitely a good leading indicator as you think about adoption, and as we think about like what that adoption and usage number is going to look like next year at this time, when as kind of behind some of that intention data. And this is certainly a data point we would want to revisit on the sooner side, given the recent turmoil going on in the banking space. What does this 26% number look like today, just 3 weeks after everything has gone down in the banking industry?
Yeah, I mean that's a pretty amazing jump in 1 year from 11% to 26%. And then my gut tells me that it's even higher now, 3 weeks after the SVB debacle. And obviously we don't know that for a fact, but just from anecdotally, you hear of a lot of people putting opening accounts at digital banks, particularly business accounts. But still, it's good news for digital banks, wouldn't you say?
Yeah, absolutely. You're absolutely right, Peter. And it's really that's what's the beauty of our product, is be able to kind of revisit something like this to really see how everything has affected consumers and what they're thinking about going forward. And one of the things that we really wanted to look at, as far as what is driving that adoption, what's driving that awareness, and then into adoption, what is that differentiating factor for neobanks when comparing to traditional banks? And when you think of traditional banks like the Bank of Americas and cities of the world, they all have mobile apps, and it's very clear that the mobile presence is what consumers are looking for. And we had actually a slide that we didn't include here today, looking exactly at that specific data point. How are consumers accessing their bank account? And overwhelmingly, it is about that mobile presence. But if traditional banks have a mobile presence, what's really driving that adoption? And so that's what we kind of look at here on this slide is, what are the main reasons for setting up a checking or savings account with a digital bank? And there's obviously a lot to look at here. And just note that this data is coming directly from those consumers that are only customers of digital-only banks. And I think there's a lot to look at here. And the way I kind of simplify this is it really comes down to user experience, ease of use, ease of opening an account, managing money, and customer service. Peter, you kind of alluded to, lower fees, higher interest rates. That's really the what these digital banks are targeting, and those lower income individuals. But we see those components in our data aren't really driving the adoption. And we've done this twice, 2 years in a row. And you can see the numbers have fluctuated a little bit, but there's still the leading features that's driving that adoption, which is really interesting to look at ultimately what consumers care about in their digital banking experience.
Yeah, it's really interesting that the 4 top sort of user experience things have all dropped in as a reason. So that I wouldn't have expected that, to be honest.
Yeah, I think one kind of call out is this is a multi-select question. So for whatever reason, we had fewer people kind of select as many options. So tried to structure this as more of like a rank order view so that you can see what are the things that are kind of coming up in priority order.
Right.
Yeah, good call out there, Natalie. So I think it's more just the kind of the ranking aspect of it, but still interesting in that regard as well. And last couple slides here, just really interesting dynamic we're seeing with some of those ancillary services and those additional services that consumers are interested in using. Obviously, as we are navigating the high inflation environment that we're experiencing right now, budgeting tools and investing tools are gaining traction as top of mind features that consumers care about in the banking space. Similarly, we're seeing customers report more use in financial management tools like robo-advising, personalized advice, along with trading cryptocurrencies. So just seeing some of these kind of ancillary type services that are gaining some traction, that could be of interest to some of these brands and what they offer.
Yeah, I mean that's sort of, I know that the many of the neobanks, digital banks today are really focusing on expanding their product suite. So it's not just one or two products. They're trying to have 4 or 5. Many of them want to be the one-stop shop, and that you can see those numbers kind of reflect that desire, I think.
Mm-hmm. Yeah. So I want to turn it over to Natalie. I just wanted to real quickly just hit on a slide, and this is looking particularly at usage of the various brands in the US. And obviously there's probably a longer tail of digital banks out there, but these were the main ones that we looked at in 2022 and 2023. You see a little bit of a drop in adoption or usage of Chime Bank, a little bit of an uptick in Discover Bank, but just a good call out into what we see from our consumers, our customers that are using our products. Brand tracking, brand awareness studies, tracking the key metrics that are really important to their go-to-market strategy and how they operate their business around awareness and usage of their product and keeping a pulse on their competitors. The brand tracking solution is certainly something that we see a lot of usage from our customers today.
And just a question before we move on. The 1,000 people you're surveying, I presume they, like you, made sure there was no duplicates from the last one. Is this a different set of 1,000 people, or is this random?
Yeah, good question. So one of the things, especially on these recurring surveys, and probably less important as you think about an annual study, just given the sheer volume of the respondents within our panel. But we have a lot of customers that are running monthly or quarterly studies, and we did it here as well, but we have the ability to offer exclusions. So ensuring that you're not hitting the same respondents every month or every quarter or every year when you're running these studies. So you're getting a new cohort of the population, and that just really ensures cleaner data quality and really gives you more confidence in the data.
Got it.
So with all that, I'll turn it over to Natalie to hit on some of the use cases.
Awesome, thanks, Dave. So we wanted to leave you all with a couple strategies to apply market and customer insights, including some examples from research that we've conducted, as well as from some of the fintech customers that we're working with today. Our first trend is creating relevant, personalized messaging. And this is something that we wanted to highlight because we know that this is especially key as fintechs work to attract and retain customers in the face of a recession. Many of the customers we work with are focused on offering practical advice to customers and on building brand integrity through more personalized messaging and content. As you all know, however, marketing in financial services does involve a unique set of challenges. The subject matter is complicated. There are strict regulations to keep in mind. And in some cases, there can also be a trust gap to overcome. This is also made all the more challenging by the fact that for a lot of Americans, even thinking about their personal finances can produce kind of feelings of anxiety. So this is one way that market insights can help tackle these hurdles by making sure that your strategy is informed by a really deep understanding of the customer. One of the financial institutions that we work with takes this approach of first conducting a custom study on financial literacy, asking questions like, what's your understanding of this concept? What's the best way to communicate with you? And so on. Using these insights, the next step is to produce informational resources across a range of channels to help consumers better manage their money. The next phase here is message testing. So when rolling out a major initiative or campaign, marketers are often responsible for assessing whether or not that messaging is actually resonating. A lot of organizations will test the impact of messaging with implicit data, so things like click-through rates or A/B tests. The challenge, though, with implicit data is you can never be 100% certain that you're truly capturing the impact of your messaging, and it also lacks the human context. So using survey-based message testing, you can compare how different messages score across a variety of attributes and make sure that those align with the associations that you're trying to achieve as a brand.
That's really interesting. So what you're saying is, like, you might have a big marketing campaign in the works, but what you're suggesting is that you test the messaging of that campaign before you roll out the big campaign, and you test, like, I presume when you say test messaging, it's testing subject lines plus the content. Is that what you're referring to?
Yeah, exactly. And usually it'll be more brief messaging that you test. So subject lines, or even like a homepage test focused on your header statements is a common use case that we'll see. So making sure that before you invest a lot of marketing resources in a particular direction for your brand, you've backed that up with some data first.
Mm-hmm.
And I actually do have an example to help visualize what this might look like in a homepage test. This is the tactic that we use internally at Momentive too with our own website. So what you can see here is how each message performed across a range of dimensions. So that makes it easier to visualize how your message is landing and what your customers think about it. You can also use this type of data to understand differences across different customer segments that you serve. We did a research study earlier this fall, and we heard that the majority of respondents would be open to receiving more communications from their bank or credit union if the messages were personalized. So I think of market insights as being an important tool in your toolbox when creating targeted content for different customer segments.
Interesting.
So another way that we see message testing and voice of customer research come into play is kind of to your point, Peter, making sure you validated your idea before making a larger marketing or product investment. And this is an example from Brex about how they used Momentive to conduct market research to gauge their customers' perceptions before a larger event. So Brex was launching a corporate card integration, and they were able to use our platform to collect responses from 292 corporate finance decision makers in just 2 days. So this was a really quick turnaround time for an audience like this that can be harder to reach. Using this data, they were able to validate that their messaging around saving time and effort actually did appeal to their target audience.
Interesting. So he's doing a keynote, or I presume, I mean, who knows? I don't know who it was, but they're doing a keynote at an event, and they're testing their messaging. I think that's, as an event organizer, I love that idea, and I think that shows certainly a level of sophistication and care that to me is actually pretty impressive.
Awesome. Yeah, I think we probably on our side could do more message testing before events as well, but I think it's a great strategy to think about that upfront market research and then even after the event, gathering feedback and see how you can improve future keynotes.
Right, right. And just as a reminder to the audience, if you have a question, hit the Q&A button. We will get to those shortly.
All right, so our second takeaway is using market insights to build new products with greater confidence. So after identifying an underserved segment of the market, we've seen fintechs develop targeted products and services that meet their needs. So for example, you might use customer segmentation data to identify a segment of customers who are interested in sustainable investing and then develop a suite of products that meet their needs. There are a couple of different research methodologies that we typically see the brands we work with use. MaxDiff uses a best-worst rating scale and allows you to arrive at a clearer order of importance when evaluating a list of features or claims. The MaxDiff questions are also shorter, which helps reduce respondent fatigue and can leave you with higher quality data. We also see that MaxDiff will typically jumpstart additional questions for future analysis too, so it can be a great starting point in your market research journey. Through the research that we conducted this fall, we found that 70% of respondents care about maximizing their credit card benefits. So MaxDiff would be a tool to figure out what those optimal features and benefits look like for your target customers. And to help bring this to life, this is the example of the MaxDiff analysis that we did. And what we found is that overwhelmingly, people care about saving money, be it cash back, low or no annual fees, or low APR. Few people cared as much about perks that are sometimes harder to quantify, like exclusive access to events, air travel perks like TSA PreCheck, and foreign transaction fees. You can also cross this type of analysis with key demographics or other survey questions to get rankings for different groups within your broader kind of universe of target customers. So for example, looking at this research, it would be really interesting as a next step to look at this by income. My hypothesis is that we would find higher income consumers are in fact looking for those lesser known perks and are less concerned about annual fees, APRs, and credit limits.
It's amazing to see the difference there from, like the cashback is clearly, like, is that out of 10? I mean, what's the scale there, maximum?
Yeah, the maximum is 10. So this is going through like a series of different ranking questions to select what you care about most and what you care about least. Right.
That's great to. I mean, it makes things very clear doing this kind of thing.
Yeah, and I think this is another data point that probably speaks partially to the environment that we're in. I think a lot of people are feeling the pressures of their dollar not going quite as far. And so it would make sense to see that cash back would really rise to the top of the list. Our second methodology to share here is a conjoint. So this is really helpful when you already have a sense of what the inputs that go into the bundle should be. Conjoint essentially mimics a real-life decision-making environment where consumers are forced to make choices between different products, each one made up of different features and prices. This can be a great tool to use in financial services, specifically when you already know that there are certain levers or features that you have control over and other benefits or rates that are off the table. Our professional services team works with customers to construct a conjoint that mirrors what you might realistically offer in a real life product. So these types of insights can help marketing, insights, and product leaders go to market with more confidence around how the product will perform and what matters most. And we've seen that having that greater certainty is especially important today when many teams are short-staffed or have limited resources.
So it's a fairly complicated thing to put together, I imagine, right? It seems, I mean, consumers not, I mean, like obviously you've done a lot of testing here, and I imagine that this sort of thing works, but it just feels like it takes a bit of effort, right, on behalf of the survey respondent.
Yeah, we do see that conjoint surveys can sometimes take more time for the customer to fill out,
Right.
but I would say this is pretty, if you're looking for really robust, precise data that mimics that real world experience, conjoint is often the methodology you would use. This is an offering that our professional services team helps kind of guide customers through. So they have a lot of experience running these types of studies with financial institutions, and they can help set it up in an optimal way.
Right.
All right, so I think we've hit on this a bit already, so I'll go pretty quickly, but the secret sauce behind how we're able to conduct studies like this and help customers like Brex reach the right audience really quickly is over the last decade, we've grown our own panels, and we've built out our panel network to give you access to 175 million respondents across 130 plus countries and 60 plus languages. So this means that we can reach a representative audience incredibly fast, oftentimes that very same day. So by now you probably have a few ideas about how market and customer insights can help fintechs navigate trends ranging from changing customer needs in today's economic climate to building customer loyalty in an environment where switching products is quite common. We also wanted to leave you with a couple of takeaways for teams that might be newer to market research. These are a couple of steps that you can do today to bring more customer and market insights into your strategies. First, assess the current state of market and customer research at your organization. Identify 1 to 2 initiatives that would benefit from more data-driven insights. You might consider starting with one project. It could be new messaging or a product launch to introduce market research and customer surveys. One thing that we've done internally that's worked really well is document the research process so that you can scale it within your team and within your organization. Dave and his team would also be happy to provide a consultation here as well. And with that, we'd like to open it up for any questions from the audience.
Okay, well, I've got a couple of questions as we wait the audience to hit the Q&A button. So I want to go back to 175 million people. So when we've done surveys with Momentive and we do it to our own email list, are you, I mean, the people that respond to our surveys, do they get added into that 175 million, or how have you created that database?
Yeah, good question. So the 175 million is a combination of our own proprietary panel as well as relationships we have with third-party panel providers as well. But we have created the proprietary panel through what we call the landing page of our core product. So Peter, when you send out a survey to whoever it might be within your network, whether it's colleagues or customers or just friends, whoever it might be, at the end of that survey, when they complete that, it asks, do you want to take future surveys on SurveyMonkey? You click yes, you opt into our panel, and we profile you on some of those basic demographic details like age, gender, household income, and now you're in our panel. And now whenever a survey matches your profile, we give you a notification that you have a survey. And we incentivize through our proprietary panel through charitable donations. So something that's really unique about our proprietary panel is every time you complete a survey, we'll donate 50 cents to a charity of your choosing. We also incentivize through the more standard incentive model, Amazon gift cards, basically incentivizing people to take time out of their day to answer these surveys. But in combination between our proprietary panel and relationships and partnerships we have with third-party panels, we've got 175 across those 130 countries.
And how much of that is in the US? Do we have Could you break it down by country?
Yeah, I mean, the heavy majority of our panels in the U.S., give or take, we're about 20 million in the U.S. Definitely our biggest market. You can imagine the biggest markets we have. You know, some of the major markets in the European region. Obviously, we got a lot of customers of ours that are doing a lot of studies in emerging markets. Some are a little bit stronger than others, but you saw some of the the feasibility we had with some of those LATAM countries. So it really ranges across different countries, but I think most, just given the sheer volume of respondents with our panel, we've got greater reach than a lot of our competitors out there when you think about some of these smaller countries.
Right, because I imagine, I mean, if someone's new to Momentive and they say, right, we want to get chief technology officers at community banks or regional banks, so we say. I mean, sometimes these are like I imagine you get pretty narrow selection criteria sometimes. I mean, do you, like with 20 million plus names in the US, I imagine you're going to be fine with most suggestions. But what is sort of I mean, do you have like a sense when someone comes on with a new project, is there do you look at your database and say, right, well, there's 5,000 potential names here. We can do this, or is there a cutoff where it's just not feasible? It's too narrow.
Yeah, absolutely, and we really pride ourselves on the speed and agility and the ability to get these projects up and out as quickly as possible. So for those customers that have a formal relationship with us, we can act really quickly in giving them a quick answer on whether we have feasibility to reach their particular audience that they need for that study. And you brought up a good point. We've been talking a lot about consumer reach and the consumers within our panel, but we also have the B2B capabilities. But there are certain instances where we're just not going to have the reach that we need if it's a very, very niche audience, and there's just not a lot of people out there in the world. Certainly, we're not going to have enough to reach a statistically significant sample from a survey standpoint. So that's what we aim to do, though, is really give you quick answers. And if we don't have feasibility, we want to tell you that up front and make sure that you have the ability to quickly shift and try to find a different alternative with maybe another provider. I think we serve as a really good complement to what expert networks are doing out there, where they've got a really vast network of very specific B2B professionals. And if you're really trying to go deep on conversations with a very specific type of surgeon, for instance, you're better off going there than trying to serve those people within our panel. But broad strokes, IT decision makers, people that work in the marketing profession, HR professionals, people that work in the banking industry, really, when you think about kind of broad titles in the professional world, that's where we can really do some good work for you.
Right. And so because obviously you have a self-serve product, right, where people just go in and they can just do it all themselves. At what point should a company be engaging you? Because I imagine you'll see all these self-serve people making basic mistakes, right? So what point should someone be engaging with you in a deeper way?
The self-serve tool is a really good tool for us, and so I want to be clear that is very much an option for customers that want to use our platform. I think what we've recognized with the years that we've been doing this, a lot of our customers have really good confidence in creating a survey and programming it into our platform, targeting the audience that they need to target and launching their survey. But there's a lot of people that don't. And even just small tweaks on how you're asking questions, how you're structuring a survey can really have a material difference and material effect on the data quality. So even if you have a lot of confidence in survey design and survey creation, you've got a lot of experience, even just having another set of eyes on your survey, maybe you get it 70, 80% of the way there, but you lean on us for the last 20 to 30%. That's where we have really the best relationships with our customers, because we don't want to slow you down, but we also want to make sure that you're getting good, clean data quality. If you're asking questions that are really introducing bias, that can have an effect on the data that you're generating on our platform. So it really varies, but I think generally speaking, I think of us as more of a hybrid solution from, you could be working with full service agencies, and obviously they do fantastic work, but a little bit, not working at the speed and the cost effectiveness of where we can operate. And then on the opposite end of the spectrum is our self-serve tool, where again is good, but want to ensure that you really have that confidence to be able to do 100% on your own.
Yeah, it's a good point, because as I say, like, you can introduce bias pretty easily, and that could distort your results and make the survey that you're doing less meaningful. So I imagine that's something that, if someone comes to you and says, here's what I want to know, and I don't really know what questions to ask, do you you'll work with them from scratch and say, okay, if you want to know this, then here is the 8 questions that you need to ask. Is that, like, do you work with people like that as well?
Yeah, absolutely. And we've rolled out a whole professional services team that we brought market research experts from full service agencies like the Ipsoses and Cantars of the world. And some customers of ours just don't want to touch the tool, and they're used to working with those full service agencies. And we have that option for them as well, where they just give us some input on the goals and objectives of their particular study, and then we go to work on writing that survey from scratch. So it ranges from everything like that to customers of ours that want to take a stab at writing the survey, and then we make some small tweaks and some suggestions to, again, clean up how they're asking the questions and ultimately help clean up data quality. So it really ranges, and that's the beauty of having the technology and the market research experts, where we can marry the two together and adapt to what individual customers are looking for in an agile solution like what we offer.
Right. And like you see the quote there on the screen with the Allbirds, person. Is that, like, imagine 48 hours is fast, right? I mean, what's is that average? I mean, what is an average turnaround time for someone that you're working with who wants to get it out quickly?
Yeah, that's average if you're a general population, and actually probably much quicker if it's 1,000 completes, which is a statistically significant sample. You can probably get it done even quicker, but it really ranges depending on how niche of an audience is and how much you're disqualifying respondents based on how they're answering certain questions. So are they aware of what a digital bank is? Are they consumers of a digital bank? Maybe you only want to speak to those consumers of a digital bank because you have a very targeted list of questions you want to ask them based on their experience and what brands they're using. In which case you're kicking out people, and it just means we have to go out to that many more people in order to get you the number of completes. But think of us as completing in a matter of hours and days, as opposed to weeks and months that you might experience with a full service agency.
Right. Are there limitations on, like, competitive practices? I'm just wondering if I'm like I'm SoFi or whatever, and I want to survey Chime customers. Are there limitations there to what you can do, or is it pretty much open? You can go to Momentive and say, I want to find out what Chime customers are thinking.
Yeah, so all the responses come back anonymized. So we're not collecting any personal identifiable information. And that's usually the first question that a lot of our customers ask. I work specifically in the financial services space, and a lot of my customers are in the investment world. And so they want to make sure they're not collecting any personal identifiable information or material non-public information. So that's first and foremost what we acknowledge up front. And so there's really based on every customer that we worked with, there's no limitation that they have as far as if you're a Chime and if you want to speak to or interview or survey a customer of one of your competitors, that's obviously one of the main use cases that we see, is understanding the competitive landscape and understanding
Right.
what your competition is doing well and maybe where they might be lacking.
Okay. That's really useful. Anyway, I think we're just about out of time, so we'll have to leave it there. Natalie, thank you so much. Dave, thank you as well. Thank you, Momentive, for bringing us what is a very informative session. Thank you, of course, to the viewers, and yeah, really appreciate your attention. Have a great afternoon.
Thank you.
Thank you.